The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
And the first two charts that I put into Tiger TV today, I think are the ones that are explanatory enough. And the first one was Apple. And we have a very large, going back several months, AB equals CD pattern ending at 529. We're trading at around 532 and change now. So at 529, if you like Apple, that is a pretty good spot to look at it. I would use about a $5 stop, but that's an ABCD pattern, and H.M. Gartley said in his book, Profits in the Stock Market, the best thing you can do for yourself is if you're in a bull market and you have an ABCD correction is to buy that D point. Now, it might not work, but if you put your stop in and, not risk very much, and I think $5 is plenty at that level because they usually hit pretty good. I know that the main thing that everyone's concerned about right now is the TBT because we finally did get filled. Be careful of what you ask for. You just might get it. We're up to 148 and change now in the June Treasury bonds. Our target was up into that 149 level. That's what we'll be looking at, 149, possibly 150. Everybody in the whole world is coming to the table now to buy Treasury bonds, and like I said, the analogy is just like a fireman going into a building with a gasoline can to try to put out the fire. So we'll see if this is going to be a good trade or not. The stop on the TBT, if we bought it today at 1680, and that was our buy our buy price, the stop would be $2 a share at 1480. I wouldn't want to risk any more than that. That would mean the bonds would get above 150, and if they get above there, I'll be surprised. But I get surprised a lot anymore. So we'll just have to wait and see. We've got a caller from Nick in Nashua. Are you there, Nick?
Yes. Thank you for taking my call.
My pleasure. What can I do for you?
I'm wondering on the index date that's coming up, Monday or Tuesday, and I'm thinking general market. I trade the SPY, and I'm wondering general market. If we go down into that date, does that mean there's a good chance of a substantial bounce from there, or is it possible we go down into that date and we get a 1987 type event where we just have a cascade waterfall type event?
Those are both scenarios that could happen. We'll know better on the 22nd. We have the new moon comes in over the weekend on Sunday. And so we will have, I believe it comes in on Sunday the 20th, and then we'll see what happens at that point. And then we have another date that is very large on the 22nd, and that's Tuesday, so we'll have a better idea. The scenario that I wanted to have, Nick, is to have the market bottom on Monday or Tuesday, and then, see it rally into Monday after the Facebook thing. But the way it's looking now, Facebook, that might fall on its face. I don't know why it would do that, but, the way the rest of the market's going, this is not a time to bring out an IPO if it were me, but, that's not me, but we'll just see what happens. But it appears more of a bottom coming in here now into this major cycle than anything else. It's going to be, and it could accelerate. I mean, we're in like I said, from the 15th to the 22nd, we're in really heavy stuff. And once we broke the 1335 in the S&P and 12,690 in the Dow Jones, I mentioned that on Monday. Those were the key figures. That if we ever broke those, that was really a very, very bad sign. And we've continued to go down. And now we're getting capitulation in the bond market because everybody wants the bonds. Everybody wants to loan the government interest at 2.8% for 30 years. But we'll know on Tuesday. I don't see anything, dramatic here. The only stock that I like is Apple. It's making a beautiful ABCD pattern. Everybody knows the fundamentals are good. Everybody knows they got $100 and some billion in cash. It's just under a lot of pressure right now. So watch 529 in the Apple, and use a $5 stop. Or better yet, buy a call. Buy a 550 call with a 3-week strike price. That's something you might want to think about.
I play that every so often. The way I do it is just to protect myself. When I buy a call on something like that, I only buy with the amount that I'd be willing to use as my stop loss, what I'd be willing to lose on my stop if I bought the thing long anyway.
Smart idea. That is great money management, Nick. If everybody did that, they would be far, far better off. But that's a great idea. In other words, if you can buy a call for $10 and that's what you wanted to risk, that's what you'll take.
Exactly. That's the way I would play Apple. Yeah, I'm thinking about doing that anyway with Apple. I've got it if there's a caller behind me, I'll shut up and let you go. But can I ask another question about the bond?
If you will send your check in as agreed, go ahead.
I will do that.
Go ahead.
I have been 200% long the long bond for.
Okay, you can get off the phone now.
For a couple of weeks. It's not a long trade. It's just been a couple of weeks. With the anticipation that we were going to have this big drop in the market and that people would rush in. I'm also 200% long the dollar. I expect to flip both of those at the same time because I think part of the dollar going up is foreigners buying the U.S. bond and having to convert to U.S. currency. I'm just starting to get nervous about this trade in the last 2 days, and I'd like to hold it into Monday or Tuesday into that index date. Does that make sense, or am I getting too greedy?
No, it makes great sense. You got a lead like Secretariat going into the final stretch at the Belmont when he was only winning by 31 links. I would not be worried too much about it. I mean, you got the dollar going up, you got bonds going up. Even if they hurt you, the shorts are so scared to death it's going to rally one time. So, I would go into the market. I mean, you got the market. You're riding a trend. Oh, my gosh, you got a good lead. Don't listen to my show for 3 days. That's my suggestion.
Well, I listen faithfully, and I love the book. I'm going to pitch your book right now, Trade What You See. I've been in the business 25 years, and I learned a lot reading that book. Same thing with Basil, by the way. I learned a lot from his because he approaches the market completely different than I ever did. But that Trade What You See was fantastic. I just want to thank you so much for that.
Well, thanks for the kind words. A lot of work went into that. But by the way, just hang in with your position. You're never going to get the top tick, Nick, so Don't worry about that, okay?
All right. Thank you so much.
All right. Bye-bye.
Bye.
Okay, we've got a caller from California. Garo, are you there?
Yes, sir.
What can I help you with?
Okay, yesterday you were talking about silver. You said 26.50 is a good time to get in. And SLV today, it hit to 26.70. And it popped up. Do you think it's a right time to get in?
Well, the only thing I can say is it held that double bottom. That's what I was referring it to. We've had a huge rally in gold. We've rallied more than $65 an ounce in gold in a matter of a few hours. So that's a sign that, that maybe the market is beginning to realize that maybe there's some type of an oversold situation in here. But if you bought the SLV, your stop goes below the low yesterday. That's all you have to do. You only have to risk, about $1.50 from here. So that's not a bad trade in my opinion. But I'm not sure that all the commodities have reached bottom. I don't know that for sure. That's why you've got to use a stop in these markets. As you can see from some of the other things that are happening in the markets, once they break, they just don't stop going down for, quite a while.
Yes. Can I ask you for one more?
Yes, sir.
It's the CF industry. See, like Charlie Frank.
Okay.
It's down at $155.
Give me the symbol again. CF. CF. That used to be Consolidated Freightways, wasn't
it? No, Charlie Frank.
Yeah, Charlie Frank. Yeah, that's what I thought. That was Consolidated.
Yes.
Yeah, it's trading for about 155.
Yes.
Okay.
On January the 3rd, there was a gap there at 154 to 149. Now
Sure.
it's right there at January gap. It closed that gap there of 2012. You think this is a good time to get in, or?
Well, this is a better time to get in than any other time frame because it's exactly at a 61% retracement off of the December low. That came in at 156, and you're just less than $1 under that. And you're down 13, 14 days in a row. The problem is you're coming into a real bearish situation in all stocks. So my suggestion would be to wait a day. Try to see what it's doing on Monday. You might have to pay a little bit higher for it, but at least you'll know that support at 156 is going to hold.
Excellent.
Okay.
Thank you, sir. Thank you.
Okay. Yeah, sure. Be careful. Yeah, everyone, be careful in these areas here because the times of these cycles between the 15th and the 22nd of May are very unusual. The market can do many unusual things, and it's already, doing unusual things with these outlier events that we're having in the stock indices, and now we're having them in the bond market with the acceleration in bonds. Even notes today, notes made new lows, and all of the German bond all have new low interest rates. And I have a hard time thinking through this because common sense tells you that if you're lending money out at that time frame for that length of time, that there's something wrong there. I mean, I know the Federal Reserve can do a lot of things, but remember, they're not giving us this money for consumption. They're giving it to banks and other people to let them invest it, for them. And what they do is just keep the stuff and, take the interest rate on the thing because the interest rates are, virtually zero. But as we get higher up the food chain here, interest rates should start to go higher. And that's where we're going to, where the pauper will come out and get paid by the prince. That's my feeling on this. Now, crude oil is one of the things we follow each week. We talked about that last week when it broke the $96 a barrel level. That was a double level for the 786, and we've been down ever since. And it looks to me like we're going a lot lower, probably into the mid 80s at least. The first really major support down there is at the $86 a level, and that's only $86 per barrel, and that is only about $6 from where it is right now. If you would keep an eye on the price here, because we have been down, I think, 10 days in a row. We haven't had a 10-day down move in crude oil, I think, since Moses made that first little boat when he sent down the Nile. Okay, folks, we got to take a little break here to pay some bills. 877-927-6648.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game, risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks. 877-927-6648, and we have a caller from Springfield, Missouri. Are you there, Jeff?
Yes, I am.
What can I do for you?
Yeah, I would just like to see if you could kind of review the Euro contract. I was in it short a couple weeks ago, and I got out, and I've been regretting it ever since, and just kind of wanted to see what you had to say about it.
Okay, if you'll take a look into the Tiger TV section, I posted the long-term Euro-US dollar weekly chart, and we are attempting to take out the lows of the January area down around that 126 level. We're down 3 weeks in a row. I think it's 11 days in a row. And so we could get a little bit of a rally here, but this is set up for a move to at least the 118 level, and that would be almost like a triple bottom from 09, 2010, and now 2012. So it certainly looks like it's heading for 1.18. So any rally that you get, if you get a good, really good, AB equals CD rally on an hourly chart or a daily chart, I would use that, to enter the market. The problem that we have here, Jeff, is because you could come in some morning and the euro could be trading at 108. I mean, it's one of those things that, if they pull the plug on, Greece and Spain and whatever, that's going to be that could be a big problem. So this is not the place to be selling it, my friend.
Yeah. Okay. All right. Thank you so much.
You bet. Thanks for calling in. And Springfield, Missouri is one of my favorite spots in the world. In 1963, I bought a Thompson submachine gun from the U.S. Border Patrol. You could buy them. You could buy guns like that all the time, back in those days. And it had a badge inside the stock, and it's been something that I've cherished all my life, and it's been one of my favorite guns. But of course, I have to have it registered now, but it's still pretty cool.
Oh, that's great. Well, we're in a beautiful part of the country here.
That's for sure. Okay, thanks for calling in, Jeff. Now, we got a call in from Tom in New Jersey. Are you there?
Yeah, I'm looking for corn, the symbol corn. And do we have volumes of bottoms or low? Because right now I see the volumes on everything intensifying, so we haven't hit a bottom at all.
I was going to cover that on the second part of the show, but since you're here right now, I'll do
corn,
is
and then I'll get going. Do corn. And do you think they could devalue the dollar overnight over a weekend? I've been listening to this guy Lindsey Williams, and that's the Illuminati plan is to devalue the dollar by 40% overnight.
I don't believe stuff like that. If they do things like that, that upsets the apple cart, and those are the things that causes the crashes that we run into, and that's not
Set
what
up for a crash.
Yeah, well, that's what would cause a crash.
Will we go back to 666 on the S&P or 999?
Oh, I don't know. I think we're going to go lower, but how much lower? I have to get through this period of May the 22nd, and then we'll see when we do get a rally, and we will get one.
May 22nd the bottom, though. If I go against what you're saying.
Yes, I think it's going to be a bottom now. The way it looks now, there's only a few more days to go. We have tomorrow's Friday. We have a holiday on Saturday. Sunday is the new moon, and so we come into the 21st, 22nd. It's on its way down, and it could be a dramatic down. That's what I think we could have happen. But
who would be smart enough to hold over the weekend? You got to be crazy.
Oh, yeah. Well, you're talking to somebody that does something like that. So, but I'll take the risk if I think it's worthwhile. But at these particular times, I don't. No.
A lot of volume on TBT still. It's not drying up at all.
I'm not worried so much about the TBT. That bond trade still looks good to me. If it gets much above 150, I'm probably going to be wrong, but we have to wait and see if that's going to happen. Now, Tom, you asked a question about corn, and last week we were talking about corn, and it went right down to the exact 61% retracement of last July's lows. That was going back a little more than 18 months, and it stopped to the exact tick, $4.98 a bushel. And we've rallied about 30 cents a bushel from there. So to me, corn has made a major bottom here. And this is new crop corn. This is December corn. So if you could buy, December corn somewhere around that 505, 510 level and stop it below 498, I think that's got a chance to have a pretty good move to the upside.
Hey, does that mean my steak's going to get cheaper when I go to the supermarket? And can you have that guy on Anderson or something? He's a pretty smart guy.
He's a pretty smart guy, and I'm going to have him on next Thursday.
Oh, great.
Yeah. I talk to him every day, but he's been very, very busy.
And you have that other guy that does the cycles with the moons. He was on a while ago.
That was Arch Crawford, and I'll have him on again. Thanks for calling in, Tom. I appreciate it.
Bye.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, options, including price targets and price stops. As recently as March 21st, Market Insight subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, your ultimate trading mastery system, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back. 877-927-6648, and we have Mark from Tampa. Are you there, Mark?
Hey, yeah. How you doing, Larry?
Well, I'll let you know on the 23rd of May. Go ahead.
Larry, I know you like the TBT. What about the TMV?
I don't know what TMV is, but I posted it into the Tiger TV. It looks very similar to the TBT.
It's a 3 times on the instead of.
Okay, I don't know diddly squat about these leverages and how they do it. I've done some calculations, and I don't know how they come up with these numbers of double and triple because I don't see that volatility in these things. So. I picked TPT because it was relatively low priced. It trades well. It follows the bonds on a correlation basis the way I wanted it to. I've waited for 4 months to get filled here. Unfortunately or fortunately, we did get filled today. and right now we're 20 cents underwater, and I've got a man on the front door, asking for more margin money. So we're going to have to wait and see what happens. But right now, this is the trade I've been waiting for, and I like this trade. If you showed me this trade 1,000 times, I would do it 1,000 times. I just like the long-term bonds getting ready to turn down. The whole world does not think it can happen. That doesn't bother me either, but the pattern is there, and all the things that I look at are there. Where it works or not, I don't know, but I like the trade.
Larry, can I ask you about more UNG?
UNG, is that natural gas
Yes.
ETF?
Yes, it is.
Yeah, I've watched natural gas, quite a few times, when we were down in that 180 level, but this has had a pretty big rally from. I have to update this because it's been months since I've actually looked at this, and this is not what I'm thinking. Well, it's had a rally between. Just like the natural gas, it's gone from around 13 or 14 up to about 18. Is that what you're looking at?
Correct.
Okay. What can I help you with?
Yeah, well, I'm in it at 20, and I was just looking to see if I should just.
You're in it at 20, so you set through the whole thing all the way down to 14?
Yes, I did. Because I wasn't.
Okay, now what I would do is I would put a stop somewhere. So if you're in at 20, you should have not risked more than $3 at any time. So put a stop at like $16.99, and then if you get out of it, look for a pattern to get in. But you don't want to set with the stock from 20 all the way down to 14. That's 3 times as much as you want to risk. So try to put a stop in somewhere under 17, and if it's right, it's going to continue to go up.
All righty.
Okay, and the market. This has been going up in a down market mainly because of the natural gas itself. So it still has a chance if we do get a rally. So put a stop in to protect yourself, my friend.
All right, thank you, Larry.
Okay.
Bye.
Okay, we got a call from John in Philadelphia. Are you there, John?
Larry, talking to you twice in 1 week. What a privilege!
And it's a privilege for me, my friend. What can I do for you?
I just love the fact that you've waited with discipline all this time, and here you are on the TV tape. Larry, I wanted to ask you 2 questions. First, a follow-up on corn, and then, more importantly, oil. I looked at, I'm here in the den, see your new crop December corn contract post, and see the 618 retracement mark that you've highlighted on that contract.
Yes.
Question on that. As I look at that December contract, you're measuring a retracement into 618 support of a rally from 2010 to 2011 peak, or 2012 actually.
That's correct.
And that rally, Larry, of course, back in 2010, that was, a contract for corn to be grown and delivered 2 years hence. In other words, it's just, almost fictional, almost. And since that December contract 2 years ago, didn't have anything to do with the cash market whatsoever, does that fact ever draw suspicion in terms of how the fib numbers work when you look at the patterns, or do you just find the patterns just work like that all the time?
Well, they work like that a great deal of the time, but when we have a situation like new crop corn and things like that, when this contract came out, that's when I began following it. So that is new crop corn. It's going to be, it's in the ground now and it's growing and it'll be harvested sometime in September, October, November. But that's the actual price for that. Now I've also put into the Tiger TV is the corn daily of the nearby cash market, which is the July. And that'll have a different, different type of a pattern because it's selling for $1 and something more a bushel than the old crop, the new crop corn. In other words, new crop corn is selling less than old crop corn because old crop corn they need demand for that right now, and that's why we have a situation where we had the bottoms occurred pretty much at the same time, but at a very, very wide price.
Great.
Differential.
Yes, I see that. Thanks for posting it. I appreciate that.
Good. Well, I hope that helps, John.
Yes, it does. Thank you.
You
Larry, to follow up, I did want to ask you about oil. Now, oil has sold off hard, and now I track both the West Texas contract, the CME contract, and I also track the Brent contract as traded on the ICE exchange. Anyway, both have sold off real hard. Do you see any buys setting up in either of those, with this big decline?
Not at this level. I think they have to go lower. We are very close to the 618 in gasoline futures. We made that butterfly top 6 weeks ago up at that $3.50 a gallon in the futures. I put that one in the Tiger room too, Tiger TV, to look at it. And now we're only a few cents away from the 61% retracement. So that's another indication that we might be near that spot.
And Larry, in that particular case with the gasoline contract, if that comes, in the next day, two, comes down into that 618, would you refrain from taking a buy with a tight stop on the gasoline, given your view that the oil looks like it could go down, another $5 or $8, or would you be compelled and just take the gasoline trade just on its own merits?
I will take the gasoline trade just on its own merits because I don't know which patterns are going to work and which ones aren't. And if I start second-guessing myself, I'm going to be, going back to look at the 200-day and 700-day moving averages, and I don't want to do that. So I'm just going to do them all, let the chips fall where they may.
Excellent. Great advice.
Okay.
Thanks so much for your help. I do appreciate it.
Yeah, thank you, John. I appreciate your comments, too.
Great.
You bet. Happy holidays to you for the Memorial Day weekend coming up soon. Charlie in Atlanta, are you there?
Yes, I am. Thank you for taking my call.
My pleasure. What can I do for you?
I'm looking at gold, and I sold gold from $1,800 down to $1,600. By the way, I sold to Tiger Metal Exchange, and he paid pretty quick for it. Now I've got some bars, and now I saw it go below 1580, bouncing back up now to 1580. I'm wondering if I should sell some more.
You mean you should buy some more?
No, sell some more.
Oh, sell some more. Okay. Well, once we went below the 1585, that was the last line of support. Now, we've gone up there. We've almost touched it again, and then I assumed it was going to do that. I didn't think it was going to do it in one day. We've had a big wide reversing outside bar day today where it's closing. So if you want to, you might want to wait a day or two because this could be a sign that maybe the selling is gone in the gold market. Whenever you have this much buying coming in, to gold in a situation when all the rest of the markets are getting hit pretty hard, you have to pay attention to that. So the one thing you don't want it to do, Charlie, is to go below that 1522 level. I would watch the gold if you got it up to 1615. That would be a retracement of 61% coming off of the high in late May up at the 1672. In other words, we dropped about $150, and it should rally about $90 back, and that would take us up to around the 1605, to 1615. So keep an eye on those levels, but don't let it go below the low that it made today. That would be a really bad sign.
Okay, so we're looking at 16
yeah, around 1605 to 1615.
Okay, that's for the top, 1522 in the bottom.
Yes.
By the way, I listen to you every day, every time you're on, and I really enjoy your show. Thank you very much.
Thank you very much. That makes me feel quite good. We got a caller from an old friend from Park City. Peter, are you there?
Hey, Larry, I am. How are you?
I'm good. What can I do for you?
Hey, I was originally looking Euro, but actually with the move in the yen today, I was wondering if you could comment some on that.
Okay, now the yen is one of my favorite cross rates, the yen versus the dollar, and we are really standing at heaven's door right now because we are setting at an exact 61% retracement of the whole move down from February. That number came in at 79.15, and we're trading at 79.31 right now. And so, if you wanted to be a buyer of the dollar versus the yen, this is where you do it, and you don't have to risk much more than about 40 or 50 pips here, on a $100,000 unit of a cross rate. So it's come down perfectly. It's got an ABCD there. That means it's a Gartley. And it's the first major Gartley buy pattern since we took off. So I would have a tendency to be long the dollar versus the yen here with a close stop of around 40 pips. It's just a nice pattern. Whether it's going to continue or not, we don't know. But like I mentioned to John, who just called in, you don't know which patterns are going to work, so you got to do them all.
Right, yeah, no, exactly. No, it's interesting because if that does reverse here, it should, I would think, put some bid into the, or additional bid into the dollar, which would then, again, hurt the euro as we go forward.
Mm-hmm. Well, part of the thing that you hear about is you hear about the dollar index, trading up around that 82 and everything, but that's basically 53% of that is the euro. And the euro has been under a great deal of pressure, and that could, it's been down. I think this is the 12th day in a row. This is the third month in a row that it's been down. It's matching the old lows from back in, I think, January, and so that was at the 125 and change level. And so we could get a rally of a few weeks here in this without too much trouble.
But what's really interesting is actually if you take the 142.41 high that we had, I don't know, a few months back, take it to the 126 low of, I believe it was January, up to the 134.88. You do the ABC down, you come to the tick in the futures market of 118.74, the previous low.
Well, these are things that you need to be watching for sure. And we have a situation where the dollar is approaching the highs in January, and the euro is doing the exact opposite. That's basically telling you that the dollar index is 53% of the euro. So we'll see.
All right. Thanks so much, Larry. Appreciate it.
Hey, thanks for calling in. We really appreciate it. We got a caller. Well, this must be caller day. Why don't these guys save it up when I'm having a rough day? Well, I guess this could be a rough day. No, we got a call from Texas. Are you there, Rapunzel?
Yes, I am. How are you?
I am good. What can I do for you?
Well, I really just want to know what your opinion is on the upcoming Facebook IPO, if you think it's a worthwhile investment or something that people should, watch from the sidelines.
Well, I will tell you this. Back in 2007, Blackstone came out. They were the private equity group, and it was really highly touted. It was supposed to be the greatest thing since sliced bread. And I will post into Tiger TV the fact that the IPO came out at 38, and in the next year it dropped all the way to 4. My suggestion would be to watch Facebook and just to see how it trades the first day or so. If everybody that buys Facebook on the open tomorrow ends up with a loss, much like what happened with Blackstone, that's a very bad sign. That's what happened to Groupon and a few of the others that came on that didn't do anything. So you don't have to do anything the first day, young lady, and I'll tell you why. This thing is really being hyped like nothing I've ever seen in my 50 years in this business. It's even worse than the one they did for Google. And I actually did buy a little bit of Google on that day just to say so I could participate in it, and I got out. I made a little profit, but I just wanted to participate in it. But with Facebook, I would certainly wait because of the timing that we have here is the market's going down. It's not a really bullish time to be buying stocks anyway, so you don't have that problem.
Okay.
So just wait. Why don't you wait? And then next week, let me see, that comes on Friday. Why don't you call in on either Monday or Wednesday, and we'll see what happens.
Okay, I definitely will. Thank you so much for your help. I appreciate it.
Okay, thank you for calling in. I appreciate you calling in. But I don't do IPOs anyway because I would give you my acronym for IPO, but I would be banned from the air. So we'll just look at it, see what it says when they come out. But they're gonna hype it, as much as they can because they're trying to sell their stock, folks. And you got to ask them why. If it's that good, why would they sell it?
Right, but also you must also
stay with me. So we have to take a break. Stay with me, and I'll be right with you.
What you think about, you bring about. What you focus on grows. If you're committed to becoming an extraordinary trader and investor, then make mastery your outcome. Yes, my best student, Steve Rhodes, became my best teacher. But even more important is what he's taught me, and the time is now for you to take advantage of his knowledge.
Thanks, Tom. I've learned that it's not what we do once in a while that shapes our lives, but what we do consistently. I want to teach you the consistency that exists in the stock, futures, Forex, and commodity markets day in, day out. For one solid day, Friday, May 18th, I'm going to conduct an online Master Trader course that'll teach you how to buy and sell the D-point. This one pattern alone, with the single best entry and exit techniques, when combined with my money management strategies, will create extraordinary rewards for you and your family. The course will be archived so you can review it as many times as you'd like, and it'll teach you to become a master. All the details are on the homepage at TFNN.com. Sign up today because mastery is one click away. It's your decisions, not your conditions, that determine your destiny.
Wow! Go get him, folks.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks. And, there's been a huge rally in gold and silver and platinum today. And that's a very good sign considering the rest of the market was down. That's an aberration from the way that it usually works, so that you have to pay attention to that. We'll see if there's going to be any follow-through, or we want to watch the first reaction back to see if it's an AB equals CD pattern, and it could be a possibility that a pretty good bottom is formed. We've already talked about the fact that the corn markets have hit major support. The wheat market also hit major support, and it had a very strong rally. And remember, this was coming at a time when the markets for the stock market and financial markets were getting hammered quite a bit, and we stopped exactly at the 786 level in the wheat last week when we were on our commodity show. It was trading at $5.95, and it since has rallied well over $3,000 a contract, which is that's a great deal of rally considering that the rest of the world is getting hammered. There should be margin call selling, and yet people are willing to come in and buy the wheat. And they bought corn, and they were paid handsomely for it coming off of those numbers. But the numbers hit right on the money. The corn hit right at the 618, and the wheat came in and hit exactly at the 786. So I've mentioned many times over the past few days that this period between the 15th and the 22nd of May is very, very important. We will have a better idea in the middle of next week, what the final ramifications are. If it was a spike bottom in the stock market, then we'll have to wait and see. But the fact that I'm not an Apple stock trader or anything like that, but the pattern in Apple is a bullish pattern, folks. Somewhere down in this area, 529 to 533, 34, somewhere in there, this stock is going to have a heck of a good rally. It's the first AB equals CD correction since Apple really took off. It's never given you a pattern like this before. And so, if you like Apple on a long-term basis, now's the time to take a look at it. Your stop would be if it gets much below, say the 520, 525 area. So that's what it looks like. I mean, and believe me, I don't know nothing about fundamentals. I don't own an iPad or a Macintosh. I do own a Nano, but that was given to me as a gift. And but it is a it's a good stock. It's and I know this isn't the stock show, but it certainly lines up nicely, for what we're looking at. Now we want to take another quick review of the cattle market because we had the top in that many weeks ago when the whole world said there was no more cattle available and cattle would be going up forever, and we finally have reached down to some support after the market dropped more than 20%. And we were helped by a mad cow disease, of course, but at least the cattle market is starting to bounce up a little bit, and we'll be able to get it. I forgot to bring the lady from Texas back on. I'm sorry, young lady. Are you still there?
Yeah, I'm still here.
Okay. I'm when you do a show, you try to write things down to keep the show flowing, and I forgot to write your name down when you were on the line. The best thing I can tell you on the Facebook is to watch it. It's going to be it's going to be very interesting to see how the stock moves, and I always watch the first part of the trading because it follows the numbers of the Fibonacci sequence the best, but really don't buy it for the first few days. The worst that could happen is I'm an absolute fool and it goes up forever like Google did, but frankly at this time of a market I would wait. So just sit on your hands for a few days and see what happens.
Okay, well, I appreciate it, Larry. Thank you.
You bet, and you can always blame me because that's always a good thing to do.
Okay, well, I'll do that if I figure it out.
Okay, everybody have a good weekend, and may God bless, and start buying the TBT before there's none left.
Great Basin Gold